Canada has been very busy lately working hard on their booming oil market. The world has been truly jealous. With sound monetary principles and an economy worth writing home about, Canada has been the model of success. And now back to reality. You came here for the truth. Today we're going to look at Canada just 2 days ago. I did a video talking about this issue, and here it is coming to fruition. Let's begin. Bank of Canada increases overnight rate target to 1%. This is directly from the Bank of Canada's own website. 1% is historically low, I understand. However, the precedent has been set. They are going to increase interest rates. The Fed is doing it, Bank of Canada is doing it, and they will continue to do so knowing that the economy cannot withstand this. So why would they do that then? Well, this is the drying up of liquidity. How do you cause a collapse? All you have to do is pull back on the liquidity. Don't worry about any of the fundamentals because the central banks are the ones who own and control this system. When we believe that what we are seeing is reality, we are unfortunately being swindled. Let's move on. Looking at this chart here from Trading Economics, it's obvious we are at levels that are very low, even compared to just prior to the financial crisis. If they were to raise up to that level yet again, we would have a calamity that the Canadians haven't seen in a very, very long time. But even if they don't get that high, let's just say they hit this 3% mark. Imagine how high real estate, the mortgage rates would be. Obviously, the market can't sustain that. It's only able to sustain where it's at because interest rates are this low. So I just did a video 2 days ago, and one of the topics that I discussed was this. The decline is due to the rise in home prices. What we're talking about is the homeowners bankruptcy index. And this, in fact, is one of the ways that the data can be skewed so that people are made to look better than they actually are. And one of the ways that people have been expanding their debt is that 2 million Canadians are taking out home equity line of credit, and even more with a second mortgage. And they simply take on more debt and they tack that on to their mortgage, believing that as long as home prices rise, we have nothing to worry about. As long as interest rates remain low, we have nothing to worry about. But unfortunately, that's not the case. It looks like they're increasing rates. They could reverse course, absolutely, but at least at this time, we know what they are up to. So if you want more details about this, I won't cover it again. Just look 2 videos back from today and you'll get my full explanation on that. And this right here, it's a full breakdown. We'll see how far I'll get in this one. In the wake of the Bank of Canada's move Wednesday to boost a key interest rate, Canada's big banks have boosted their prime rates. So you need to understand that the central bank acts and then the commercial banks act accordingly. And in fact, they don't even have to wait for the central bank. We saw that with mortgage rates starting to increase before the central bank even did what they said they would do. So here we go, prime rates at 3.2%, up from 2.95. So the significance of this, right away, it doesn't make too much of a difference. But when you think about it in, let's say, a 6-month period, if they were able to increase rates twice within that time, that's 50 basis points. That could be more significant. And what they note here is that it's going to raise borrowing costs a little bit for everyone. And that is very key because you have to remember, it's not just you and I that we have to worry about. It's your neighbor down the street. It's all of the loans along the way. And this article here covers different aspects. I'm just going to quickly go through it then. Mortgages, for example, obviously, that's pretty obvious here. Lines of credit and home equity loans. I just told you that millions upon millions of people are doing this. So right here, you're looking at this. Households added $10 billion to their consumer credit balances in each of the past 4 quarters. Think about that. How much debt is being added onto the backs of each individual every single day? But they don't want to think about it because real estate prices are rising, the debt can continue to expand, and the economy is red hot. That's literally what they said. No. Don't worry about the homeless people on every single corner of downtown Toronto. Don't worry about the fact that the shelters are at full capacity. Don't worry about the fact that the job market is not exactly what they say it should be. The fact that every single business out there somehow either a bank, financial establishment of some sort, an insurance company, and they've got all the big towers. Manufacturing, nowhere to be found. Great high-paying jobs, nowhere to be found. But you have a few CEOs making very good money. You have a whole bunch of basically office workers that are essentially factory workers now making low wages or lower wages. Then you have an army of those people. And then you have, odds and ends here and there. Service-based jobs, lower paying jobs. But we don't want to talk about that. Borrowing from banks accounted for the bulk of the rise led by personal lines of credit, notably home equity loans, lines of credit. Think about that again, as I just mentioned it, the fact that when people have taken on so much debt and they've used these lines of credit, all of a sudden that borrowing cost is going to get more of a burden on these people, going to become more of a burden. All right, talking about variable rate mortgages, obviously, immediately, so many people have told me that it is very foolish to purchase a home to get debt without a variable rate. But you have to realize that I would rather get a fixed rate, even if it's higher, even if it's relatively higher, just to know that for the next 5 years, this is the rate I'm going to pay. I can guarantee that they're not going to be able to change that on me, instead of a variable rate where I have to worry, is it going to go up? What am I going to be able to pay the payments? Just do fixed rate. But no, nobody does that. All right, then we talk about credit cards, where it says that, for the most part, they are at standard rates, but a lot of people carry a lot of debt on them regardless, and I think that puts a burden on them. Student loans as well, they're talking about, and some more information here. I'll just move on. Interest rates are going up again as Canada's red hot economy. All right, now that's the one I was talking about. Red hot economy. I'm from Toronto. I speak with people in the different industries, whether that is in the gold mining. I've spoken to people in the financial industries, banks, all types, investment companies, everything. Okay, and I get a sense of what's going on. I also talk to the average Joe and try to get an idea of what they believe. And there is a general consensus here, is that real estate prices will go up for eternity. And that is not your opinion or not my opinion. I'm saying what I've gathered here from the average individual. They believe that as the prices decline, the central bank, or what they would say the government, will step in and they will fix it. That's just a matter of fact, because they believe that this can continue forever. And that is such a foolish belief to have, and unfortunately people are going to lose out big time as a result of this belief. You can see that in this article here, it talks about the fact that because of what they did, the Canadian dollar has gone up to 82 cents US. So that is some interesting information, because it seems like the US dollar doesn't necessarily have anything to do with what they do with interest rates anymore. And neither should any of these other currencies, because they're all weighted against each other and they are all just part of the same compost heap. It's a bunch of garbage that we are being forced to use. You're not allowed to use competing currencies. You're not allowed to go against what they say. They dictate the policies. They do all of these regulations and laws and everything. They put that all in place and you're forced to swallow it down. If you found this video informative, please give me a thumbs up. My fellow Canadians, please give me a thumbs up as well. And last but not least, if you found this video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. So if you want to look through these books, you can do so at Amazon. They have a look inside feature that will allow you to flip through the pages of these books. Links are in the description below. I also wanted to mention the fact that if you haven't already, you need to subscribe to this channel. It is very important because I'm constantly doing videos. You need to check up every single day if you're not subscribed. If you hit that subscribe button, there's a little bell beside it. If you hit that, you will make sure that you are aware of every single one of my videos. So I hope to see you here again. Leave me a comment down below. I always like to see the positive and the constructive criticisms that individuals have for the channel. I do appreciate it very much. Take care.